Welcome back to the What's More podcast. I'm your host, Quinton Harris. You dialed in for episode 207. In this episode, we're going to tackle what the changing landscape of real estate looks based on some of the climate features we've seen here recently. And what I mean by change of real estate is where is it changing the dynamics, the psychology, the affordability of where buyers are looking to purchase and where people are deciding to live. And we're going to tackle that and more in this episode of What's Your One More. All right, welcome back. So a couple things we're going to tackle in this show. I want to kind of talk a little bit about, obviously, we've had a lot of storms and our hearts go out to the families and people that were harmed by that in any shape or form. In Florida here, we have seasons, and part of the seasons are massive. One is a hurricane season, and we deal with it quite often. And obviously, the impact has happened across the country here, especially in the Southeast, over to the Atlantic and in the Panhandle areas. Hearts go out to those individuals, and definitely, hate to see all of that. And this is not a lighthearted episode by any means, but what I wanted to kind of focus on was, kind of tracking the storm seasons going back to 2000 all the way forward. It's become obviously a lot more active. I moved to Florida in 2004, and I was welcomed with 4 back-to-back hurricanes with my family, and that's something we had never experienced. And living here 20 years later, I'm not saying you become numb to them. You just kind of become used to adapting to what you would do to survive one or live within one. And everyone understands what areas they're impacted by and what the risks are of where they live. And most people adhere to the warnings as these things come about. But one of the things that maybe we don't recognize till post hurricane season or until you're actually financially impacted by that is even though you may not have suffered any damage, the lasting impact of these things economically have a huge impact on the consumer, the homeowners, and the citizens of each state in which that's impacted. And it's a trickle-down effect to where it's not only in homeowners insurance, it's hitting auto insurance. And if you live on the West Coast, you're dealing it with wind and fire insurance and wildfire insurance. It's just a different situation on some of these coastal states. And the reason I wanted to kick off the episode with the financial impact of future home buyers and buyer psychology is I do believe it's changing the aspect of where people can afford to live. And some people are saying, this is just not what I want to be around any further, and changing the impact of thought processes. And you've heard me talk about in previous episodes that the homeowners insurance conundrum that we have here. And we did a whole breakdown of how that started pre-COVID, really. And then COVID really kind of exploited some of the issues with homeowners insurance in Florida in particular, with the roofing issue that we spoke about in previous episodes. And since that episode, we knew some things were going to happen because our state legislation had already said, listen, we recognize the problem. We're going to step in and stop some of the attorney charges that are exuberant, as well as some of the lawsuits that were being filed, et cetera, et cetera. But since that time, the carriers that were in the state of Florida really have restricted and gotten smaller the amount of them that are here. Now, while we're getting some to come back, they're coming back with a cost. And so some of the things that we have seen during this time is homeowners insurance become one of the leading cost affordable issues in the state of Florida. And I know over in California on the fire and the wildfire coverage is a leading cost of insurance and charges. And then same thing on the Panhandle area, all the way through Texas. You're seeing the rising cost of insurance. And then what's happening is you're also seeing it rise in auto insurance because these insurance companies can't just bear the brunt of, let's say, homeowners and filing claims and et cetera, et cetera. They have to spread this out across multiple lines, and cars and auto is one of them. So I take a look today in this episode and dive into maybe some solutions, but also like bringing to light some of the issues that you're seeing, and then a resource that recently came out at the end of September that I was kind of shocked by when I saw it. I'm going to bring us some examples of this, of climate risk factors that you can actually look up of homes that are listed for sale. And I'm going to use some here in our local market and kind of go through some of those risk factors of online where you can find this stuff. So just to kind of bring you up to speed, if you're not aware, obviously, if you're a homeowner, you're very aware, your homeowner's insurance has just gone up exuberantly over the last 4 years. And it's not even like a stepping of rise of cost. It's just been just a complete jump, right? It's been a rocket ship, if you may, of insurance charges. A prime example is that we've seen borrowers and we've seen homeowners that had $1,200 a year annual insurance policies go to $4,000 a year. And nothing has changed. They didn't have to get a new roof. They didn't file a claim. It's just the rise in insurance charges. And that is led by a lot of those previous lawsuits I was talking about, damages to roofs, and then ultimately just storm damage in general and risk assessments that insurance companies feel they have to place on homeowners in these coastal state lines to make up for the policy premiums that they're paying out on damages that are there and potential future damages that could happen. And so I was talking with my producer, and they actually do that with auto insurance as well. And he kind of mentioned, hey, man, I'm with X company, and you probably know who this is. He's like, they have me put this device in my car, and it like tracks my driving record. And obviously, the better I drive, the lower my premium is. And I kind of thought immediately, a light bulb went off, because that ideology is exactly what happens with homeowners insurance. I'll give you an example here. So in 2020, my homeowners insurance policy on my house went from about $1,700 a year to $4,200 a year. And that's a pretty large jump. And I reached out to the carrier who had that policy and my homeowner's insurance agent. And I was like, hey, I understand costs are going up, but this is over twice the amount of what I was normally paying. Now, that scenario was about a normal scenario for every Floridian. While it may not have been that $1,700 to $4,000, it was a jump like that 200 plus jump. And so a lot of Floridians were left like scratching their heads. Hey, what's going on here? Why is this happening? And you would call your insurance agent or the carrier, and they would give you the tagline that costs have gone up and this is what we have to pay for. And what happened was, just like in my producer's scenario, where he was, being rewarded for good driving habits, there was no relief for insurance habits. So you have to dive a little deeper in here. One of the things I learned was that if you start finding out, well, why is my premium going up? What do you average? What do you have my home's age at? What are you showing? If you start asking some of the questions, what you'll find is that depending on the age of your home, your insurance provider just lumps you into a category of homes that age. So for example, my home at the time which this happened was about 18 years old. And they just took my home and they threw it into a 20-year category and said, hey, homes of 20 years, we know the variable risk for a new roof is going to be this. And we know a hot water heater is going to be this. And so they started putting all these factors on there, but they didn't ask the question, did I have a new roof? And if I did, how old was that roof? Or I didn't have a hot water heater or a new hot water heater, and how old was that? None of that was in there. That just got slated in there as 18 years on all of that going on 20. So I got a premium that reciprocated that. And when we started diving into it and they found out, oh, the roof is less than 10 years. Oh, just replaced the hot water heater literally 12 months ago. The premium came back down from $4,200 back down to $2,700 because I went from that, that group they lumped me into and brought me back down to a group that had updated items. And I mean, if you look at it from an insurance standpoint, hot water heaters, if they get old, they bust, they flood. That's a major cost. And then roof is a major cost. So those are two of the major things they look at on that. And that's why you get lumped into that older policy group. But just like auto insurance, when they give you those devices to see what your driving record is at the beginning, they lump you in. You've seen the commercials where they lump you into all these crazy drivers, right? But if they can track your habits real time and see what you're doing, you get lower premiums. They reward you for driving and being a safe driver. Same concept on the homeowner side. You get rewarded for having those types of things updated, if you may. So interesting enough to me, though, is that when I go back to that buyer psychology, you look at people that may want to buy, and I'm going to use the beaches area here in Jacksonville. Something that was interesting to me, they may want to buy in this area. So what's the major site people go to when they look for a home? Now, I'm not a fan of this site, so let me go ahead and lead with this, but a lot of people go to Zillow first, and it's hard to argue with. They don't have a lot of market share when it comes to people searching homes, Zillow estimates, et cetera, et cetera. They've branded themselves well. But when people are looking to buy, if they type in a home address or they type in a property, usually the Zillow is what pops up first. So if you click on a home that's for sale, and I'm just going to use a couple different examples here. I'm going to use one here at Atlantic Beach, right here in the Jacksonville Beach area up at Atlantic Beach. Shout out to our Atlantic Beach people. So when you go there and you click on this home that's for sale, I'm not going to use the address for privacy policy reasons here, but pick any home, right? You can find one there. As I scroll down, this unique tool that's exclusive to Zillow, which again, they paired up with a company called First Street. First Street is an assessment company that assess climate risk. You heard me, climate risk to market areas. And they do this for all kinds of banks, REITs, insurance companies. You get the point. And in this particular segment of the Zillow estimate and the property data, what you're finding is that they're breaking it down based on really 5 different factors. One is flood, one is fire, the other is wind, air, and heat. And when they break this down on this, what I'm finding is that they give it scores, right? They give you scorecards based on the following things here. And so inside of this, they're saying that, hey, you have a flood factor of a 7 out of 10. Meaning giving you a break, you get the point, 1 out of 10. It's a 7 out of 10 on flood. Fire factor is a 3 out of 10. I'm interested to see how they got that. The wind factor is 10 out of 10, saying insurance critical. And on the flooding side, it's saying, hey, listen, you're in a FEMA map flood zone. Here's the most recent flood date and time it happened. And then they have an air factor and a heat factor, and the heat factor being like how hot it is now versus also how hot it's going to be in months, days, years to come. But anyhow, I thought that was funny because it was extreme heat factor at the beach, a 10 out of 10, go figure. And they say, they even went as far as saying the number of days per year, this will be over 104, will increase by 200% over the next 30 years. Now, again, I don't know how they come up with that, but they're saying due to global warming. They give you all these stats on here. You can look it up. You don't need me to kind of go through it here, but it's interesting. And then again, the biggest one being severe flood factor. But if I'm a buyer and I talk about the psyche of the buyer and I'm looking at this and this pops up on here, this would pose a problem. I mean, I would say, hey, 7 out of 10 severe flooding in this area. And then, hey, extreme winds, like that's going to be a little concerning. But you're also looking at the fact of what does that mean for my homeowner's insurance? What does that mean? And I mentioned earlier, I said, hey, listen, one thing I like to do is offer some solutions. So I talked about how to get out of that lump that maybe your homeowner's insurance is putting you in and thinking just, hey, listen, we're going to lump you together, in my example, with a 20-year home. And some things that you could show them and maybe do and present to them that would get you out of that and back down into a lesser aged pool of homes there. Same thing with flood insurance here. In the state of Florida, I was talking about this. I hear this from some agents all the time, but I was talking about it with insurance agents. And I was talking about this with real estate agents just yesterday. And I had someone go, well, wait a minute, when did this happen? I'm like, this is what I'm about to share with you has been a thing for some time. Maybe it's just not vastly spoken about, but let's use an example of this home in Atlantic Beach. If I wanted to buy this home in Atlantic Beach, and I know it's in a flood zone because it already shows me on the Zillow report it's in a flood zone. First question I would be asking the homeowner is, do you have flood insurance? And I'm sure they do because it's going to be a requirement in that area. And if they have flood insurance, I'm going to ask them what the cost of that is. Now, in the state of Florida, we know that the flood insurance is primarily, if not 100%, provided by the Citizens Pool of Insurance. Now, Citizens is the state of Florida insurance is provided to homeowners in certain instances where you can't get it, and flood being one of them. And the max coverage you can get on that in the state of Florida is $250,000. So the max damage that can be covered is $250,000 of flood insurance from Citizens Pool. Now, you have two ways of getting that insurance. You can get it either A, if you just voluntarily want it, and it's going to be a much cheaper premium, or B, if you're in a flood zone, you're probably going to end up getting it because you have to, and it's not going to be as cheap because you're in a flood zone. Now, the caveat to that is if for whatever reason you were proactive and you bought that flood insurance and then you got put into a flood zone, you're grandfathered in by that old premium. That's a substantial savings and a substantial difference. So that does happen, believe it or not, because the flood maps and flood zones do change quite often here in Florida. So the first question I'm asking that homeowner, and if you're a particular buyer or a real estate agent listening to this podcast, and this is something that's not in your toolbox, definitely add it to it here. One of the questions I'm going to ask is, hey, do you have flood insurance? And they're going to say, yes. And you're going to say, great. Do you mind sharing with me what the premium is? And then they're going to tell you. And depending on what that is, it may be significantly cheaper than what you can obtain as a new buyer of that property. Here's the win. Here's the secret, I should say, or some sort of solution I was speaking of. That seller can transfer that policy to you, the new buyer, through that same insurance company. That is absolutely can happen here in the state of Florida. So give you another example here. So back in 2008, Tropical Storm Lindsay came through the Jacksonville area, and it flooded a lot of Jacksonville. And my house sat on a retention pond. And I'm like, there's no way in hell that pond is going to get to the back of my house. Well, Tropical Storm Lindsay in 2008 proved me wrong. And that darn thing came to my house, very close to the edge of my house. And it was scary enough to be like, man, is this thing going to stop or are we going to keep going? Just sat right on top of us here, just pouring down rain. And so the next day, I went to my insurance agent. I'm like, hey, how do I get a flood policy? First thing was, hey, listen, you're not in a flood zone. I'm like, well, that's what you think, because I saw that lake come to the back of my house, and that could happen. A retention pond's fancy word for lake, or I guess the other way around. But anyhow, I said, no, okay, I'd like to get it. So I bought that policy for the max coverage, and it was $450 when I got it in 2008. Today, that same policy, which by the way, I was moved into a flood zone 1 year later. Today, that same policy only cost me $650, excuse me. It goes up because as FEMA rises costs on there, the coverage costs go up, $650. But I'm in a flood zone because I was grandfathered in on a previous policy that I bought when I was not in a flood zone. Here's the interesting part about this. If a new homeowner was going to come buy my home and I didn't tell them I had flood insurance, or I didn't share with them the policy premium that I have, and they just went and got their own flood insurance because the lender goes, hey, you're in a flood zone. And they go, great, I'll go get flood insurance. That's going to be roughly around $3,000 to $4,000 to have on my property. Now, what could happen is if they asked me the question, do you have flood insurance? And I go, yeah. And I tell them I'm paying $650. I could gladly transfer that to them, and they could inherit that policy for $650, saving them that drastic difference. Now, talk about the psychological or the psyche of a buyer. When I look at these climate risks, or I start finding out properties are in these flood zones, or they have extreme wind factors, if you may, as they call it on here, I'm going to ask the current homeowner questions like, hey, how much wind damage have you had over the last 10 years? Did you have like your roof shingles blow off? You have a tree blow out? I'm going to ask these kind of questions because then they would have to disclose that to you, right? And then that they lived there 10 years. And then how much flooding have you had? And they'll tell you the flood insurance is going to be the next question. And how much can I save on that homeowner's insurance and flood insurance combined as I start to delve into the home buying process? And I guess one of the things that I think the media did a really good job, and I say that sarcastically, is they really made these things seem like they're more broader than they are isolated. Here in Florida, North Carolina, different story, right? And Southern Georgia, different story. But here in Florida, they made it look like the whole state was flooding and underwater when in fact, again, isolated areas. And I don't want to take anything away from those areas or those people that went through what they went through, because that is horrific when it happens. But the whole state itself wasn't in that state of an emergency. So you got to imagine what these insurance companies are thinking when they're seeing this and they're not on the ground level and they're not in the state as it's happening. Same thing. They take on worst case scenario and then they bill it out through the whole state of Florida and make all of the Floridians encumber that entire rise of insurance. And I think what has to happen is there has to be some sort of common ground between our state legislation and homeowners insurance. Homeowners insurance cannot be a hindrance for someone buying a home. That should never be the case. The insurance that's provided to the homeowner should be there to protect the homeowner at all costs if something severe happened, right? It is there to also protect the lender if something severe happened and there's a lien on the property. It should never be a hindrance or a reason or an excuse or an obstacle, more importantly, for a homeowner to be a homeowner. That is where we've gotten in the state of Florida. That's where we've gotten in other states. And if you live in those other states, I'd love for you to put those comments on our YouTube channel at What's Your One More. We'd love to hear about what you're dealing with. But just in the few episodes we've done talking about affordability and housing and interest rates, many of you have turned to our YouTube channel at What's Your One More with number one, and you guys have emphatically spoken about the rise in insurance costs around the country. And it's not just in Florida, and you've made that abundantly clear. So thank you guys for reaching out and doing that. But I think that if it's not just state legislation, I think it's going to have to be federal legislation, Congress, Senate. We've got to get our arms around this, because if we want to improve home ownership, if we want to improve home affordability, and if no matter what administration wins this election, both are trying to push home ownership and the affordability of home ownership, it doesn't necessarily start with interest rates. It's a combination of interest rates and then insurance. Again, insurance can't be an obstacle on this. It has to get better on this. So hopefully you can take some of these solutions we've talked about, find out exactly what your homeowner's insurance has you allocated as far as your roof life, as far as your hot water heater and other items in your house that are important to that homeowner insurance. And then when it comes to flood insurance, ask the seller that's vacating the property they currently have it, and can you absorb that and adapt it into your policy so that you can take on the rate that they currently have. So guys, if you like what you're hearing, please share this podcast, 5-star review it. If you would, leave us some notes and commentary on our YouTube channel, What's Your One More, as well as on our Apple Podcast and Spotify. 5-star review it and leave some comments. Guys, thanks for tuning in. We'll see you the next episode of What's Your One More.
Got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into it, yeah.